And so as the machine lady says, recording in progress, today we talk about payment certificates for the JBCC. You would have remembered from last week that we spoke about payment certificates and we just had a very good overview of the major parts of it. We're going to do that again, and then we are going to go in more detail. All right, so here we are, JBCC Payment Certificates. Where does this information come from? It comes from clause 25 of the JBCC. JBCC, the contract. And if you read through here, you can see that it outlines the procedures and requirements for processing payments to the contractor during the course of the project. The way I would best explain this to you is that a payment certificate is a written record of events which have financial consequences. It's a written record of events which have financial consequences. So what am I saying there? I'm telling you in this point, or in this particular portion, that there are certain things that impact the project. And if you could just read numbers, and you could just read an income statement or an invoice or a ledger, if you could read some sort of financial data about the site, then what's going to happen is you will have, just from reading the numbers, just from reading the finances, you'll have a very good idea on what exactly happened in this construction project. So that's what payment certificates are about. They're really a written record of the monetary consequences that actions have happened, or that of events that have occurred on the site. So you can, if you just look through the data, you'll see, oh, there was an adjustment to the contract value. It changed here because the contractor arrived late for the project, and that had to push out some deadlines, and that incurred expenses, and so on and so forth. You can almost see with the financial record, from a financial record, how the project's lifespan has actually turned out. And so in clause 25 of the JBCC, it actually specifies to you what are the requirements of a contract. Now, it's very difficult if you are trying to figure out what the requirements of a payment certificate are. Like, if you just had to list them one by one, you can write those things and do calculations somewhere else and then write the values back next to the headings you wrote and issue that to somebody. But that's not very efficient. It's not very helpful. So what the JBCC contracts have, they have like an addendum, and this addendum, this payment certificate, this is an example of what a payment certificate looks like. The reason that it looks like this is because it's actually a financial document. Now, this page is broken up into certain portions horizontally and vertically. And it allows you to read this documentation. Now, in financial documents, they are always laid out in rows and columns because it's very easy to read numbers from rows and columns. But if you look at a document like this one, you would have this stuff in text instead. This stuff that is in text instead, that's written in paragraphs, is easy for the flow of information. But to read and create meaning from numbers, we need to have rows and columns, almost like a matrix. So this is what a payment certificate looks like, and it's laid out very well. So how do you read a payment certificate? The payment certificate plays a vital role in documenting and verifying the amounts payable to the contractor for work done. Very important here to note the words the contractor is getting paid by the employer, because that's how the agreement is arranged. Remember, in a JBCC contract, the agreement, the contract is between who? It's between the employer and the contractor, not the principal agent. The principal agent is the administrator of the contract. They are administering the contract. All right, so now that you know this stuff, and I mentioned to you that there are segments is broken up into, you can see very clearly from this image how the horizontal segments are broken up. There's a header that contains certificate and project information. In this particular header, I call this the ID. This is the identification document of this particular payment certificate. And it's very logical if you have to think of this particular certificate being lined up in a drawer, in a cabinet, in a finding place. I know nobody really uses that anymore, but so be it. When you open up a drawer and you pull out the payment certificate, the header on the top has the biographical information of this project. Who are the people getting paid? Who is the person that's making the payment? Where is the project based? What number certificate is this? And so on and so forth. So this, if you just pull it up a little, very little, you can see what number it is of the payment certificate. You can see who's the project for, what's going on. All of this information is very helpful. And perhaps most importantly, it tells you whether it's the final or the interim payment certificate. And that's quite important. You have all this information on the header. You then have the body, which contains information in the form of columns, which cover financial data with timelines. So there's something I always mention to my students. At one stage, I used to discuss the concept of finances with students. And I always mention to them that financial data is always inextricably linked to time. There's something about time and money that you cannot separate. And it's exceptionally important that you know that. For example, when you get paid in a month for whatever your services were the previous month, or you get paid in advance, if you're getting paid a salary, the money you have is not as though you're going to have, say you get paid 10,000 Rand a month. It's not like you're going to get 10,000 Rand a month for the end. That 10,000, if you look at every single day in the month, you don't have 10,000 Rand every single day of the month. The first part of the day, or maybe the next day, you have debit orders that get deducted from your account. Then following that, you buy food with it. Each time this 10,000 Rand that you had at the beginning of the month, as the month progresses, your money decreases until you get to the next month, and then it increases again and then decreases as it comes towards the end. Notice that here's the money, and as time is progressing, the money is getting less and less and less. Always realize is that relationship. Time and money are inextricably linked. And so the middle of this particular certificate talks about the duration, the times when things are supposed to happen, a timeline. And it also talks about how the money is spent at specific portions in that time. Really important to know that. Finally, the footer. The footer is the official stamp to say, I, as the principal agent, the person that's administering the contract, the person that is exceptionally responsible for making sure that this project and the relationship between the parties maintains or is maintained in a civil order. It is their responsibility to say, you know what, I checked the works, they look like it's progressing where it's supposed to be. I can now issue a payment certificate to the contractor and give a copy of it to the employer who is paying the fees, or whatever the case is. So having a look here, the final stamp at the bottom, the stamp at the bottom is telling us that, you know what, this has the seal, an official verification. It's done. It's cool. We're going ahead with it. So that's the three things we're looking at. Now we're going to move on to the next one, where it talks about how to complete a payment certificate. And I'm actually just going to put a pause in here and change to a screen that has this image a little bit more clearly. So here's my screen, which shows that diagram a bit more clearly. And what I'm going to be going through here are the columns. Now you can see I got a little bubble here. Now just a hint to yourself, and by the way, I always don't take credit for this. When I was in high school, I had a lecturer that used to coach us on how to approach exam papers as though you were a university student as opposed to a high school student. And the one thing that he showed us was a bubble hint. Now in your notes, the way that I would best express a bubble hint to you is sometimes you take notes and those notes aren't for yourself. You almost, as though you're taking notes, you're just kind of writing down what the person said. When in fact, what your notes should be doing is your notes should be a conversation with yourself. So when you read it, you're like, oh, I know what you're saying, because you're writing it in some sort of way that your brain can process. But just say you don't do that. These bubbles here are very good little bubbles. As you have your notes, you have a thought bubble being pulled out from there, explaining in a much simpler fashion what's going on. And so that's what these bubbles are in this work that I'm showing you. Here's the official stuff, the hardcore stuff on the left-hand side, the notes, the things that you actually have to work through, the content that you have to work through that contains valuable information. But the thought bubble stretched out from that is information you can understand. It's like you talking to yourself. You should always have a conversation with yourself in notes, because if your notes are not conversational, you risk doing one of two things. One, you risk only knowing what the data is saying verbatim, and that might mean you don't actually understand the work. And two, the second thing is your notes will not be helpful to you. If you don't have these little things, these keys in the notes to tell you, you know what, this is what's going on, then you're going to, when you actually need those notes, like in an open book exam, like paper 2 is, your notes aren't going to help you anymore, because you just have a whole bunch of paper there and you don't know how to navigate it. But this is advice. Obviously, you know yourself better. This is just advice I'm giving you from my years of experience. So here we are. I have labeled this as ABCD for you, showing you that here, this is how you read the columns. There are 4 columns here. You can see it's the contract sum. Let me just write over this so you can see it. Here's the contract sum. You can see there's a current contract value, the current valuation, and the current certification. That's literally the names of each of the columns. But what does that mean? That's the important part here. I'll tell you that the actual hardcore answer for this is in the JBCC, especially the JBCC guideline, which you may or may not be aware of. There is a guideline on payment certificates in the JBCC, and they have one for principal building agreement. They have one for minor works agreement. They talk about recovery statements. You can look through the guide. It's online. It's available. But just to tell you here for the principal building agreement, which is most likely the one that you'll be doing in this examination, is contract sum. The JBCC will tell you what it is, but here's what it's sort of meaning. By the way, this is just for you to understand it, but this is the budget or the tender value, and it never changes. This is the amount. This is like the dream, the aspiration. Everybody's like, your project is a 2 million rand project. That's how much I'm budgeting for, and everybody's happy and we're joyous, but it doesn't actually end up being that way. Sometimes it ends up being a lot more than that, and it's very, very I don't know if miraculous is the word, but miraculous might be the word if you actually meet it on time within budget. So this is the dream, eh? This is the amount everyone's hoping for. This is the wishy-washy stuff. This is like, that's what I thought it was going to be. Then B, as it says here, is the same as A. So it's that same amount, but it's added with adjusted values. So perhaps things happen during the construction process. And you can see there's things like, if you look here, there's a security adjustment, which we'll get to in time, adjustments to contract value. These things have been adjusted for reasons like maybe there was a delay, or there's even cost fluctuations that could be accounted for. All those things would typically fall under B. Next, we have C, which is less than A and B. Now, remember I told you that thing just now about time and money, where I said as the time progresses, the money decreases. It's currently what's sort of happening here in current valuation C. C has to be less than A and B, because what C is a build-up. C is saying, at this moment in time, how much is the project worth? How far have we built up the project towards this particular amount was supposed to be the goal here? That's what C is about. It's how much is it currently? What is its current value in the project? And then D in the certification. The certification, the current certification in D, is when you take an amount, you take the amount from the last payment certificate, and you subtract it from the amount that is currently here, or the current valuation of it, and you will be able to get an amount remaining that is the amount that's due to the contractor. Now, perhaps what I'm saying is not very clear, and maybe the way I said it is not entirely helpful. So I'm going to explain it again slightly differently. And if you don't catch it on right now, it's okay. That's why we go through the stuff together. You're going to do a subtraction sum here. And what you're going to do is when you're doing the subtraction sum, you're going to end up with a value that is the amount that is due to the contractor currently. That's how much you have to pay the contractor currently. And so this amount, the current certification, is literally what this document is for. The payment certificate is how much is a contractor going to get paid at this phase of the project for the work that they have done. And so that's why this payment certificate is really all about column D, or the primary part of it. There's something that I've written here. It says, NB, don't forget to calculate VAT and tax and to add to the values. Really important. You might write all of this information in, and then you're like, oh gosh, what I've forgotten to do is I've forgotten to add in the tax. That's really important. Note that there's always tax. Even when you're doing calculations, you always add in the VAT afterwards. Note, importantly, in South Africa, currently, VAT is 15%, not 14. Used to be 14, now it's 15. However you remember that, I don't know. Maybe when you were 15 years old, you worked for the first time and you had to pay tax, which I highly doubt, but some way remember it for yourself. Okay, so that's how you look at each of these columns here. This is a high-level overview. I'm not saying that it's 100% accurate, every single word I'm telling you. I'm trying to give you an understanding. And then we're going to get into the numbers. The next hint I just want to tell you is that wherever there's nothing, where nothing has happened, maybe there's not been a contract price adjustment, or maybe there hasn't been damages, that's a 0. You just write 0. Okay, just write 0. Another hint for you is if nothing was done at this particular phase, even if nothing was done on this particular phase, you still write 0 in all of the columns, and you still issue that payment certificate out. because it is a record that nothing was done at this particular stage. So even if they had to tell you, they'll give you an entire story and they tell you, but there were no practices that happened in the stage, there was no construction, and they say fill out the payment certificate. This whole payment certificate is going to have a whole lot of zeros in it, but it'll have biographical data here. It'll be verified by the contractor and so on and so forth. Okay, really important for you to note. All right, now we're going to hop on back over to the booklet. And when I see you on the other side, let's go forth and look at an example together on how they might ask you the question. Now that we've popped up back to the other side like magic, and you didn't see me doing that, here are the example questions. These are typical ways they could ask you this stuff. Now, I know that I went through some things here, right? I went through what each of these columns are and what's happening here. But it's not helpful if you haven't actually practiced it. It's like learning Revit or AutoCAD or BricsCAD or whatever you're using. By the way, they're not sponsoring this video. I'm just mentioning their names because we use it. When you are learning any of those softwares, I think that's the plural, you have to actually enact it. You can't just read it and be like, right, now I know how to use Revit. There's the wall command, press WA, and I know that's how you make a wall. No, you got to actually use the thing. So it's the same thing with this payment certificate. You actually got to do it. So here I'm just talking to you through it, but we're going to have to do an example together. Here is a way they're going to ask you the question. So here we are. It says the following questions are typical questions which may come out. Notice how the questioning style varies from directly providing the values to providing you with insights where you will have to extract values yourself. That's a key part. You have to read the question if it's a scenario, and you have to interpret that question, and you're going to have to draw the scenario out. I advise you to draw everything out. But just say they gave you directly exactly what they want. Then you can draw it out, but it's not so necessary for you to do it. So the first question is as follows. You are the principal agent on the following contract. You may select any name you wish for your own practice. The JBCC PBA is in use, and the following contract data, remember in the JBCC, they're called the CD, is available. All amounts exclude VAT unless otherwise stated. Really helpful stuff, right? So we're looking here. Look at this. They're not telling you anything about the scenario. All they're saying, here's the values, here's the information, plug it in onto the document. So it's telling you here, the employer is Best Building Supplies, who's the principal contractor, what is the site about, what is the project about. Literally, this is the ID document, the first part of it, the top of the page, the header. You can start putting that information in immediately, all right? Then it's telling you here, what's the site description, the contract sum, the security selected, meaning the amount that's been withheld or reserved as almost like a security so that the project can be done. It then tells you the quantity surveyor handed interim valuation number 8 to you on this date, and then the valuation contains the following information. It all excludes VAT. Tells you the value of the works, tells you the value of material on site, off-site, authorized adjustments, blah, blah, blah. It's very, very directly telling you what's going on. But you're going to have a question like this, a scenario where it says, here we go, these certain people have contracted these people on the site. This is the information that was provided to you. They give you an explanation of what happened. It says in the latest phase, there were material goods on the site to this value. It mentions that there was a cost fluctuation, and then continues to talk a little bit more about the contract value adjustment. Then it'll tell you a little bit more about how much of the project was complete, or sorry, it says there was also security payment 52%, blah, 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 blah. The point here is, here's a scenario. Now you need to digest this information and internalize it. Don't be afraid of this. What I'm going to do is I'm going to show you what are some of the steps that we can follow. So here's steps that you can follow if they give you everything that's required. So let's look at it. Step 1, identify what has been given. I'll read this to you, although I know you can read. Or maybe you're 5 and you're watching this video. Maybe you can't read. Well, I'm happy for you 5-year-olds starting so early in your life. In a payment certificate question, as the above, gosh, my wife is going to tell me I'm making dad jokes again. But okay, in a payment certificate question as the above, list out what has been given immediately from the list of items which are necessary in order to fill out the certificate. Okay? Certificate. If the project information from the header, body, and footer is provided, you're well on your way to scoring all the marks. Peeps, if you can just fill in information in the correct place, you get marks for that as well. Beautiful, isn't it? If not, it means you'll have to work out some of the values. In this case, there's not too many things you have to work out. So here we go. When you go into the exam, know that these are the things that you're very likely going to have to look for. If this is an open book and you are allowed to take this in, I would advise that you would take in this document or a document like this and say header items, body items, footer items. What this is saying is, do you have everything for the header items? Yes. Do you have everything for the body items? No. Do you have everything for the footer items? Yes. And then each one of the items below is the things you have. So in the header, and it's showing you in the image, for the header, the interim certificate number, do you have it? Yes. Do you have the employer name? Yes. Do you have the contractor name? Yes. Site name? Yes. Issue date? Yes. You got everything that you need to put in the top. Great. If the top is out of 5 marks, 5 out of 5 for you. Right, let's look at the next one, the body. Do you have the contract sum? Yes. Contract value? Yes. By the way, where am I getting this information from? I'm reading this and I'm saying, what did they provide me? And I'm just saying, they provided me with this. And so I'm just checking off the tick box. Do you have current valuation? Yes. Current certification? No. Oh, so I need to work that out. Do I have adjusted values? Yes. Previous amount certified? Yes. VAT on all amounts? No. Oh, okay. So VAT and current certification, I need to work out. Beautiful. I'm okay. Still, there's nothing to stress about because remember, you can score marks just for filling it in correctly. All right, next, footer items. Principal agent's name, yes, that's obviously you in this case. The date issued, they will tell you the date issued, or you come up with one that's today's date. By the way, remember, if you are saying you did the evaluation of the project now, meaning you went to site and you went to check and verify, is everything as the contractor says it is? Is it on the site? Yes, it's there. Great, I checked it out. 2, then you have the date you're going to issue it. So you had like an evaluation date, then you have the date you're going to issue it. Okay, that might be the same day in the office. Maybe your office's rules is as soon as you go onto the site, the same day you must issue the certificate. But usually it doesn't happen that way. Maybe it happens 2 days afterwards. So you went to the site, and then 2 days afterwards, what you did was you then issued it. You gave it over to the contractor. You said, here we are, this is the payment certificate. Now on, or to the employer and said, employer, this is what you need to pay. The third date that's there is the date where you have to say, what is the latest date you'll get paid by? And that's from the issuing date, 14 days from then. So whatever the issuing date is, it's plus 14. And that's the date, that the latest date that the amounts can be paid. That's the latest date. So it can be happen anytime before that, but that's the latest date. Just thought you should know that information is really important. Okay, it also tells you the percentage completed of this particular project. It then says we can now proceed to fill in the values and work out that we have and work out those we do not. So the second one is fill in what is provided, work out what is not. Here's another summary of what column A, B, and C, A, B, C, and D is. Let's read D quickly. Column D is actually column C, but taking out previous amounts paid. Remember, column C is everything done up until now, including the things which have already been paid for. So we don't want to pay that stuff again. That is why we subtract everything from C by the amounts previously paid to the contractor. It'll give us how much the contractor needs to get paid for his work done so far. Again, don't forget VAT. And I even can see that in this particular note, it says here 15% and 14%, don't forget. Okay, it says here that remember this particular project is done in 2016 when VAT was 14%. So don't confuse this in the exam for yourself. Put like a note to yourself, an alert. Put a sticky note on your kitty's forehead. I'm joking, don't do that. Put it on your laptop. So when you see it, you know, do not pay that. Here's an example of this thing filled out. Let's look at it together just to talk you through this particular thing. Okay, let's do some hand holding here. All right, so we're having a look here. We're saying we got all this information. If we're saying all this information is here, let's see where it goes. So the header item, it needs to be filled out here. Beautiful, it's filled out at the top. What payment certificate number is it? It's number 8. Let's go and look here. Did we actually get that information? Oh, here we go. The quantity surveyor handed interim valuation number 8 to you on 17 August. So they're telling you here that the quantity surveyor is actually the one that prepared this payment certificate values. They're just giving it to you to fill in on the payment certificate because you are the principal agent. For this particular project, although the quantity surveyor is on the project, they want you as a principal agent, because that's your job, that's your role, to actually issue the certificate. And they're telling you here that it's interim certificate number 8. Notice that if they told you something like the interim payment certificate for the last one was number 7, and they tell you what the amount on the previous one was, maybe it was 14,000 like here, then you know when you are writing a new payment certificate that you can't write, okay, it's payment certificate number 7, because the last time it was number 7. You need to now write payment certificate number 8. And that's a place where people get confused. What am I telling you here? I'm trying to tell you that your certificate number, if they don't tell you explicitly what to write on the certificate, then what they're going to do is tell you about a payment certificate from the last time. And if they tell you the last payment certificate was 7, then the one you are writing, you need to write 8. Or if they told you the last payment certificate was number 8, you need to write number 9 on the new one you're filling out. Okay? They're telling you it's an interim payment certificate. They're saying here's the employer, the contractor, the works, here's the site, so on and so forth. Then they're telling you here's the valuation date. So that's the date the person actually went to the site, right? That's you, the principal agent, went to go and verify the works. You can see here from the 17th, they went all the way up until the 25th. So that's like a whole host of days, almost a week later, that they have now issued the actual certificate from the 17th to the 25th. Then you can see 25 plus 14 will give you the 1st of September. And that's the 3 dates I was just talking to you about. So here's all this information. You can get full marks with this. Beautiful. Now we went back here to look and we said, okay, the next one is the body items. Do we have the contract sum? Yes. Did they give us a contract sum? Well, it is here. You can see that they tell us here the contract sum is 25 million bucks excluding VAT. So we got that. Do you have the current contract value? You look for it here. It'll tell you what's the current contract value. You can find it. Should have been given there. Does it have the current certification? How much the person's getting paid now? No. And where will we find that amount? We have to work that amount out. And that's column D. That's what we're working out. We're saying C minus the previous amount that was paid. And that's how much that needs to get paid to the contractor. But before you get lost, let's look at it. So we have row A, B, C, and D. Let's look at row A. Hey, there's a 25 million here. What's the net contract sum? So we're looking down here. Don't get lost. We're looking down here. Hey, contract sum. Looking down, looking down. Then we're saying, is there contract price adjustments? No, there's no contract price adjustments. Beautiful. So that's a 0 there. Then look all the way to the bottom. It's the same 25 million. And then they're saying, what is the tax off that 25 million? So I'll make this just a little bit larger for you to read, right? Let's go 150. It's saying here, what is the tax on that 25 million? Please don't get scared. Don't get lost now because you're seeing numbers. The numbers are just text that's put in a box. Don't cry. You'll be okay. Again, we in here, 1. Here's the amount. There's no contract price adjustment, so we write a 0 there. That was my suggestion to you before. Now there's 25 million bucks, and notice it's saying 14% of that 25 million bucks is 3.5 million, and whatever the other numbers are, and they're writing it down there. If you follow the column all the way down, all they did was they added up the 25 million plus the 3.5 million, giving you 29 million. Beautiful. Look at that. The whole of column A, contract sum, full marks for you. Beautiful. Hey, there it is. Notice here, 14% because the year was 2016. VAT is now 15%. Okay? All right, beautiful. Column B, current contract value. So again, they're saying here that there's no security adjustment that occurred on the site. There's no amount that was somewhat withheld. They're saying here that there's 25 million bucks here. And then there was an authorized adjustment to the contract value in this particular part. Here was that amount. You always put a sign here because what you're doing is we are saying that the authorized contract value, what we did is we adjusted this contract, making it more. You could have adjusted the contract sum, making it less. Then you'd have a negative sign there because you're like, okay, well, and they will tell you that they're adjusting it to be less or to be more because they're adding to this. And by the way, this value is given to you here. It's not like I just came up with this value from nowhere. The value is given here. Look at it. It says authorized adjustments to the contract value to date due to upgrade to external cladding is that much, approximately that much. So we have it in here. We have it in here. We're adding these. See, we're still looking at column B. We're taking the 25 million. That's the net contract sum. Adding that, you can see there's no contract price adjustments. We're adding it and we get a number here. Then we're asking, what is 14% of that number? And we're adding 26 plus that 14% VAT together. Here's column B. Beautiful. Look at that. Full marks for you again. Hey, hope you're getting happy. Now we're saying in C, current valuation of the project, right? So what we're saying is currently at this moment in time, the project of 25 million is valued at 16 million. We've done 16 million Rand worth of that 25 million. Then it says there's materials on site. It actually tells us here because where it talks and we're talking here, he's talking about materials on site. It tells us the materials on the site, how much was it? What's the value of materials off site? No. So let's go back here quickly. We got here, there's materials on site, 1 million bucks, materials off site, 0. It's the same thing that we saw there, we're just filling it in. And then we're like, right, let's add these two together. The subtotal of that comes to 17 million. It's a 16 million plus the 1 million giving you the 17. Don't be lost. And if you are confused, put the video on pause and go back. Unfortunately, I can't go back for you now because I'm talking, moving forward in time. Here we are in C, right? We're saying the 16 million, which was given to us, plus the 1 million, which was given to us, equals the 17 million, which is there. And then here we go, we're taking the same amount that's here and just moving it to the side. So we're doing like the knight's move, right? The L shape, the knight's move, like, chess, when you're playing the game, if you know about chess, the bead moves that way. Okay? So we're taking it and then we're shoving it there to current certification. Why? Because remember, in the current certification, what we're doing is you're saying, what is the value of the project from C minus the last time that we paid an amount? So here's the 17 million. It's the same thing, the current value, 17 whatever million minus how much? They told us that the last time they paid the contractor 14 million bucks. So now you can see here that it's 17 million minus the 14 million. And then the net amount of that 17 minus 14 will give you 3.1 million. Beautiful. Now you have that amount, this 3.1 million. But it doesn't end there. It says here, here's a subtotal. It's the same 3 million. But what's the VAT on the subtotal? So the VAT of that subtotal is 14% of the 3.1 million. If you add it all together, 14%, by the way, is at 439. If you add the 3 and the 4 together, you will get, or the 3.1 plus the 400,000, you get 3.5 million. Okay, that's how much is due to the contractor for this particular stage. Now you'll see there's a percentage here, which is a security minus a variable only. You'll see that there's supposed to be a tick here on how much of the project was complete. You can see you can put in your name here, you need to sign, and the date that you're issuing it. Remember, the date you got on top here for the 25th of August is the same as the date as the bottom. Make sure that the date on the top for issuing it is the same as the date at the bottom. Always remember that. I don't want you to be too concerned about the bottom information for now, but this is telling you about how far is the project completed, and then it's telling you the contract sum execution, the security for construction minus the security for construction. Don't worry about that right now. I don't want you to be too confused. The most important thing I want you to take out is we have the information for column 1, we have the information for column 2, we have the information for column 3 and 4. We actually got all of that information all the way from here. They actually gave it to us, and all we had to do is work out the current certification value, and we had to work out the VAT, finally giving us the amount that is going to be paid to the contractor. Now, maybe I said too many words here, but if you follow this, if you put this video on again and you watch it and you slowly actually write down the answers for yourself while you're listening to me talking, while you're going through this video, you'll find it's a very, very simple thing to make out. It has to be simple, peeps, because everybody in the construction site must be able to understand this document, read it and progress it. There's nothing complicated about it. It's money that we're talking about here. And remember, wherever there's money, people will endeavor their best to understand what's going on so that they can get paid what is dutifully right to them, so that you pay the amount that is correct that you need to be paying, and I receive the amount that is correct that I should be paid. So that's an overview of the contract certificates in the most simplest form here. We'll talk about the second one and a slightly more complex scenario in a little bit of a while. So let's see what you've made of this so far. Let's take some questions.